If you're looking to mix up your investment portfolio, then trading indices may be the right move for you. So, what is an index? An index, sometimes called an index, it's a group of companies that are grouped together to create one company, or an index. Both indexes and indices are acceptable plural forms of the word index, or refer to more than one index. It measures the value of an individual stock market. It's calculated from the prices of selected stocks, typically a weighted average. An example of this is DAX, German Stock Index. It consists of 30 major German companies trading on the Frankfurt Stock Exchange with a market cap of €971.8 billion. Like global indices, include stocks from multiple regions and types of business globally. Regional indices include stocks that are specified geographically, for example, Africa, Europe, Asia stocks, etc. National index represents the performance of the stock market of a given nation. Probably the most commonly quoted market index are national indices, composed of the shares of large corporations, and listed on the nation's largest inventory exchanges, such as the American S&P 500, the Japanese Nikkei 225, and the British FTSE 100. Industry indices, some of them are specified in ranges of industrialization, allowing you to form a view on whether a certain industry has good or bad prospects, and trade on the basis of that. Like finance, mining, energy, etc. And lastly, the exchange indices may be based on one or a group of exchanges, like Johannesburg Stock Exchange, or by earnings, example, developed markets, frontier markets. The DJIA, Dow Jones Industrial Average, represents about a quarter of the value of the entire US stock market. It's the most well-known and most frequently used index in the world. Standard & Poor is a larger and more diverse index than Dow Jones. In general, the S&P 500 index gives a good indication of movement in the US marketplace as a whole. Nasdaq index is known to trade technology stocks. Unlike the Dow and the S&P 500, Nasdaq Composite includes large and small firms. Dow Jones began with 12 stocks. Today it contains 30 of the largest and most influential companies in the US. For example, McDonald's stock is worth approximately 5% of the Dow Jones. It's traded on the New York Stock Exchange and the Nasdaq. The downside about Dow Jones is that it only has 30 stocks in it, whereas S&P 500 has 500 stocks. The S&P 500 covers all major areas of the US economy. Also traded on the New York Stock Exchange and the Nasdaq. Although this index is known for its large portion of technology stocks, the Nasdaq Composite also includes stocks from financial, industrial, insurance and transportation industries, among others. The Dow Jones Industrial Average Dow Jones is one of the oldest, created by Mr. Charles Dow in May 1896. The S&P 500 was first called when it introduced its first stock index in 1923 and began tracking a small number of stocks. Nasdaq was founded in 1971 by the National Association of Securities Dealers, NASD.